What is going on, everybody? Today we're going to be doing our session recap for January 2nd. I thought today had some good lessons to be learned, and it stresses the importance of being able to switch your bias in a market and react to particularly how talking about the opening type and looking at how an open occurs and what that can tell you about the rest of the session. Let's check out gold first. So gold, we came in basically with the idea of continuing this balance until proven otherwise. Now, we had been in a multi-day balance, and right at the open, we have, where is this overnight low? Okay, yeah, we have this drive up into this bearish reference, which is considered the top of the balance, and immediately test down. So this was a place I had gotten short, and right at the standard deviation is where I scaled. At that point, I moved my stop to break even, and we were looking for continuation to the bull zone down here. Obviously, we did not get that, and instead the buyers picked it right back up and pushed us above. So they pushed us above. This opening type would then be this drive lower, this auction lower, with buyers instantly picking it back up. So this right here tells you people are interested at buying aggressively at the top of value. That's very steep, aggressive buying that you see right there. So that's your first clue that, hey, we might be about to go imbalanced up here. Then we get above this reference and we just start to hold and hold and hold and hold and hold. So that is giving us acceptance. Now we have acceptance above a distribution with this opening type already being bullish. That could give you enough to initiate longs, okay? So if you didn't get yourself involved in this move that happened, then you have another opportunity right off this standard deviation. It might have been hard to get into with all the chop that you saw. It could have been hard to qualify. From here, we did look for 30 and 32 to scale out, so 32 was the top. Not a horrible place. And then another classic opportunity is when it pushes back down into the +1, tries to push into the +1, and just starts to hold and hold and hold and hold and hold. That's a controlled risk long, and you'd be looking for that +2 standard deviation, maybe one of these prior highs, maybe take it off there, things of that nature. So, plenty of opportunity. Here you have a decent return back to value. I like this setup in gold a lot, is when you have this imbalanced move up, and then you push back into this DVA, and that actually could have been something that you took right here and got stopped out on based on how you read order flow and how you read the situation happening. Because this right here, it pushes us in, and then you get that test of the top of that value, and then you start to go back down. So I could definitely have seen myself trying to qualify a short here based on this return back into value. All right. Now looking at crude oil. So we only actually had one of our references. We had this bearish reference up here, neutral, and then bullish down here. The only one that actually got hit at all, kind of a slow day, 1 cent change, was this bullish reference. And this whole time, I was kind of trying to get us to come up to this top of the auction. However, as soon as we wicked out this overnight low, which was what? Yeah, like down here. Yeah, so as soon as we wicked this overnight low, my expectation for the overnight high to also get wicked dropped significantly because it's a very low probability for you to hit both in one session. So we had this rotational. I was trying to get long off this market, and I basically I was able to, scale at the near the tops and then getting stopped out at break even, so it's kind of frustrating. Finally, you had that bigger impulse move down, that stop run, right into our bull zone. Great place to buy pullbacks. So bull zone hit, respected. You start to see order flow kick in, buy side aggressive buyers kick in, buy pullbacks, buy pullbacks. VWAP, this would have been a place where you scale for sure. Maybe leave a small position on in case we get that move higher. However, again, after we broke that overnight low, I wasn't really expecting us to get back up to that overnight high. So I was happy to take it off, everything off there. And after that, it was really just, you know, playing that same rotation again. So we did get another move into the bull zone. You might have been able to qualify something off of this again. All in all, this was still a good reference as far as where buyers are and where that demand was. So you could have most definitely traded using that as a primary reference. And finally, we're going to talk about the Russell, which I learned a lot about today. So I had said in my morning post that I wasn't too interested in trading this market. I didn't like the context setup that I saw. All-time highs were up here. We had this gap up overnight, which you don't see a lot in crude or in the Russell. So we had a gap up, and my favorite setup for the day coming into the session would be for a instant retest of this multi-composite high volume node that you see right here. And I was looking for us to hit this high volume node and then instantly find buyers and take us back up, maybe try and wick out all-time highs. We did get a buyer response, but failed at VWAP, and that would have been our first clue that we're probably going to retain prior balance. So as soon as that happened, you know, long side was no longer your friend as soon as we broke back into value. And this is a market where you don't really want to fight the trend. So don't fight the trend, you know? We break that overnight low and it just dumps. We get to this inflection point I had marked here and we get a little bit of a try from buyers and then it fails again. And you eventually get this kind of double bottom down here, which we haven't been to in a little while, so it wasn't even on my radar as a significant inflection point. And from there we recover back up to that overnight low. So the lesson to be learned out of this market today was how you treat a high volume node. So yes, my initial theory was that we were going to come down, hit this high volume node, and then instantly push back up and retain our imbalance. However, this right here is telling us a story. It's telling us this doesn't want to stay imbalanced up. This is telling us buyers are not at the strength they need to be to retain imbalance, and we fail back down. So as soon as we fail below this high volume node and back into value, you're looking to short pullbacks to the bottom of value. And right here, if you were trying to buy off this inflection point, we get right up into this area, which is a low volume node. If you see on this profile right here, it's low volume node. So we get up to that and we hit it. If you were a buyer in this area and you started to see selling back down, you would want to get out of that trade pretty quickly, especially given the lack of acceptance into the DVA. You're still technically in an imbalanced down state. So I really wouldn't have been interested in buying this market until we got out of this negative standard deviation zone and back into our DVA. Maybe that would have been pullbacks here. That would have been, again, hard to justify, but it really depends on how you qualify a trade. The open, definitely. If you did get long off that high volume node, I don't think that was a bad trade. I would take that again and scale at VWAP. And then if you're someone, for me, when I scale, I usually move my stop loss to break even. Because at that point, if we move all the way back, worst comes to worst, I get wicked out to the tick and I can get back in. It's not going to kill me, best case scenario. And what happens to me more often than not is that it does hit my break even stop and then keeps going down, so I'm able to get it for a cheaper price. So it just depends on how you manage your trades as to if this was something that's good for you. And then at that point that we break down and hold, you're now looking to short pullback, and plenty of opportunity to capitalize in this market after that. Don't fight the trend, especially in the Russell.